people. So I'm just going to quickly run through the rules that I use to trade the silver bullet session. So these are all the rules that I actually use when I am trading inside the New York session. So the first thing you want to be doing is just mark out all the liquidity zones. I'm going to run you through a breakdown of all of the trades that we took today and then we took on Thursday. So we've only taken 2 trades in the last 5 days because obviously we had the weekend. So what we will do is we'll look for a liquidity zone that we can actually mark out. So we'll have our targets and what we want to see price take first. And then we're going to look for AMDs, so accumulation, manipulation, and then distribution. So that's one of the things you want to look for, and there's a clear example of that, and I'm going to show you exactly how to spot the accumulation, manipulation, and distribution. And you want to have a clear target in mind. You don't want to just be putting some random targets in. You want to make sure that you have a clear direction of where you want to go, which will be London highs, relative equal highs, relative equal lows, and London lows. So the only time you actually want to enter is inside of the macro session. The macro session, I'll mark them out for you right now. All right, so make sure you're taking note of this. This is the macro times that you want to trade. So the highest probability one is always the first macro, and then it just comes down gradually each macro you go into because of the handles and the actual volume that's coming into the market is most probable at 9:45, 10:15, which is 15 minutes after the New York futures market opens. So then you want to wait for your clear manipulation, and then you want to make sure you have a valid stop. Then you just want to enter simply on a fair value gap. So I'm going to break down this trade that we took this morning, and hopefully you guys can learn something. All right, guys, so coming into the session, you literally only need to have it marked out like this. It's very simple. It doesn't take a lot of work. So you can see here clearly you have London highs, which are also relative equal highs. So we have 2 confluences here. We have London highs and relative equal highs. So it's a major draw on liquidity, and we know price is going to come back to fill those imbalances and hit these stops that are resting above that area. And then coming into the 9:30 open, you can clearly see the price is manipulated at the 9:30 open. So it shot up to only come and send price back down to sweep this sell side liquidity right here. So we'd mark out sell side has been hit. So now you can see sell side has been hit. And what do we have here? You know I love this indicator, guys. Red vector candles coming in, pushing price down, artificially breaking the sell side liquidity. So right at this point, I'm starting to pay attention. I'm looking at the charts going, right, I can see what's going on here. Price has been pushed down artificially. It's hit stops. It's triggered people to actually take shorts. And then what do we have at the lows? Purple vector candle with resting with a blue vector candle. So it's very, very clear to me that the volume is slowing down in this area. So price is going to look to reverse. Anybody that was taking shorts has subsided from actually having that opinion. So market makers force people to trade lower to only go and bring price back up. And the indication is this point right here. Okay, because you have the purple or the pink vector candle mixed with the blue, which just shows me that volume is slowing down in this area. So I'm starting to pay attention now. I just want a clear displacement higher, and that's when I'll know to enter. And then another thing you want to be doing is actually marking out the 9:45. Just so you know you're in macro session, you don't want to be accidentally trading outside, which when you're starting, sometimes you will accidentally do. So when you're getting used to trading this method, you just want to make sure that you have it all marked out nicely so you cannot fuck it up. So what do we have here, guys? Another attack of the lows. So now you want to be marking out this second attack at the lows. So this is now going to validate all the guys that are going short that they're in the right trade, and they're probably going to add to their positions. And anybody that was going long is now closing their position, thinking it's breaking it down lower. So now they're closing their longs and entering shorts. So it's a perfect trap for market maker to actually start attacking the London highs. All right, guys. So let me turn off this, make it a little bit clearer. What can we see that's happening inside of this zone right now? We have an inversion fair value gap. Inside of that area now has been completely disrespected. So the inversion fair value gap has been respected or disrespected, and we've also had a displacement higher. The displacement was a lot cleaner on ES. So you can see clearly on ES that the displacement was a lot stronger, which gave me the confidence to take this trade. So market structure shift, simple as that. And then what do we have right there? The fair value gap entry. and I said 25 handles was your stop. So you do have a valid stop because it's below the candle that created the fair value gap. So you actually have a valid trade right here. And then the London highs is around 225 points away. So you'd enter on your 4 contracts. Obviously we're a little bit late to the party. Let's say you just entered here, for argument's sake. And one more thing I just want to mark out is what you have inside of this zone right here. Breaker block, yeah? So you have your breaker block, which you guys should know exactly what that is by now. So you have a breaker block, inversion fair value gap, a sweep of the lows again, and a market structure shift on both NQ and ES. So extremely clean setup. You take this all day long. And just like that, guys, there we go. So you can clearly see that that trade worked out and it come all the way back to the London highs. We did have a trailing stop to swing lows below current price, but we were out 80% of the trade. We just leave a runner for London highs, which on this occasion we actually didn't get. Unfortunately, we were stopped out, but we was only in with 1 remaining contract. So we managed to secure around 93 points on that trade alone. Alright guys, so coming into the Thursday session on the 27th of March 2025, it's the exact same story. So make sure you guys are marking out clearly where you're going to be trading. So if you come onto the higher time frames, you can clearly see the price has swept all of these key zones of sell side liquidity. So mark it all out, SSL and SSL. So this is the accumulation, the manipulation, and then the distribution. So another point that you want to have marked out is the London highs, which rest right in there. So let's mark that out. So now we're coming onto the 1 minute chart. So we're coming into the actual session time. Price has just been continuously dropping all morning. And then what happens right at the 9:45 macro time? You start getting your reversal. What do we have here? Red vector candle pushing price artificially down. So we know we need to be looking at actually taking a long from this point. And there's your fair value gap right inside of here. And then 25 points is below the current wick or the current candle that formed the fair value gap. And your displacement is above this high because you created another swing low. So you know that you can enter on that fair value gap that rests right inside of there, which we'll mark out right now. So as soon as price comes back and taps us in, our target will be London highs, which is marked out in this box right here. There you go. So price tapped in, literally tapped the box and then moved away. You buy with 4 contracts and you target London highs. 164 points or so. And there we go, guys. You want to make sure you're taking some take profits along the way. So I typically would take my first TP at the swing high or the buy side liquidity, and then I would have a second TP at another high, and then our final runner would be 164 points. If there isn't a clear high or the high is too far away, then I'll just do 25 points, 50 points, keep it simple. And just like that, guys. Super easy, not overcomplicated. I'm not selling you anything, you know, this is simple stuff that you can do on your own. And I'm going to put the proof up either here for the trades that we took this week, and proof that we actually take them on the live signals room, so that you guys, if you're trying to learn this method, just subscribe for a month and see how you get on. Just see if your entries are matching up with my entries, because that's the most important thing that you need to be doing, is actually making sure that you're taking the correct entries and you're not just seeing things that you think you were seeing, like as in you want to see them. You need to actually be seeing trades that are actually eligible for you to be taken. You don't want to just be taking any old trade just because you're getting FOMO. I see tons of people doing that. You don't want to be that guy. So now I think you're all equipped. I'll leave you with that information and I will see you guys soon.